Many of you have been asking me for an update on HIMS and HERS Health. I'm getting so many comments. Please give us an update on the stock. Why did you stop talking about the stock? Because the stock's going down. Why you're not talking about it? I'm seeing a lot of people capitulating on HIMS, selling the stock, trashing the stock. There's a lot of drama at the moment around HIMS and HERS Health. And I believe some of the reasons why people are selling the stocks are unjustified. I'm not seeing justification for that. And I personally have sold many stocks I owned before. I'm a big believer in not marrying your stocks. At every stocks that you buy, you need to have a thesis around it. And if the thesis is deteriorating and the fundamentals are deteriorating, if there's something that's materially changing and the company is headed into the wrong direction, I'm 100% all in on exiting the stock and moving on with no feelings and no emotions and no attachment and nothing. So in this video, I'm going to do something special. I'm not going to tell you why HIMS is an amazing company and all these kind of things. I'm going to tell you all the reasons of why I would consider selling HIMS and HERS, some signs that I'm looking for. And if I see those underlying signs or those underlying signals, then I would potentially decide to exit HIMS and HERS Health. I'm going to give you all those things today. But before I do that, I'm going to give you all the reasons of why I wouldn't sell HIMS and HERS Health, which is why a lot of people are selling it right now. And then I'm going to give you the reasons of why I could potentially sell HIMS and HERS. So I really hope you enjoy it. The first reason of why I wouldn't sell HIMS and HERS Health is because the stock is going down. HIMS and HERS, as you can see on this chart, it has a history of having some crazy drawdowns, 51% right now. It had them before up to 65 or 66% back in March and April. It was brutal. And I've been in the stock from $7 per share. I've seen it all. I've stuck with the stock all along. This is back in September 10th of 2024 when the stock went to $14 per share. $14 because people believe that there was some kind of risks with the company and they need to assess the risks. Everyone does that when the stock's going down, but no one does those things whenever the stock is going up. This is another way where on November of 2024, the stock went down 21% in one day. Why? Because Amazon is going to enter the market and HIMS has no moat and the stock's going to get killed. This is the story with the stock. If you're new to the company, you might be shaking out about all the things you see on HIMS House on X or all the things you see on X in general and people talking about the stock. But trust me, most of those things don't really matter. What really matters at the end of the day is the quarterly earnings report. It's the earnings report of the company. You could look at all these things between the report and you can talk yourself out of the stock to feel better, and you're most likely going to be selling the bottom and the stock goes up much higher. This is the biggest mistake that retail investors make, is they can't really hold through those drawdown because they caught up in the narrative instead of looking at the actual numbers, the actual earnings report, the actual reasons why you bought the stock in the beginning. And if this reason is still intact, then I would not be worried too much about if HIMS goes up 50% or it goes down 50%. What I'm mainly paying attention to is the earnings report, and the company over the long term is going to follow its earnings reports number, earnings per share, free cash flow per share, and profitability metrics in general. The second reason why I wouldn't sell HIMS and HERS is because the revenue growth has been flattening out over the last 3 quarters. And I told you guys why this has been happening. And the reason for that is that HIMS used to mass sell compounded GLP-1s because it was on the shortage list. Now it's no longer on the shortage list after Q1, so HIMS has entered what I would call a transition period from mass selling GLP-1s to diversifying the revenues to weight loss, not just weight loss, but sexual health, mental health, women's health. HERS business is booming like in a major way, and they're diversifying their business in general. Now you have to appreciate how significant it was for HIMS to mass sell GLP-1s. And it's not going to be easy to transition away from that. And to me personally, I'm shocked that the company is still holding up revenues and it has made a new high in terms of revenues, despite them no longer mass selling GLP-1s. So the transition is happening faster than I expected, but this is a transition period and we should be over that by Q1 to Q2 of 2026. Another reason why I wouldn't sell HIMS and HERS is because of all the drama around the CEO, because the CEO tweeted something, because the insider sold, or maybe he sold a few shares. And this is well known amongst all growth companies, including Palantir. Palantir CEO has been selling Palantir stock from $5 or $6 or $7 per share. He's been selling all along, and I don't believe he ever bought the stock. And there's many other stocks in the same boat. Why? Because of stock-based compensation. They get most of their compensation in stock. Of course, they're gonna be net sellers of the company. They don't even need to buy stock. They're gonna be getting it in bonus, and that's just saying with a lot of those tech companies and growth companies. And HIMS is no different. But if you look at the track record of the CEO, he took this company from nothing, from $26 million to $2.4 billion in under 10 years, in under, I should say, 5 or 6 years. This is absolutely crazy, guys. And his track record speaks for himself. Any kind of metrics you look at, total member growth, any metric, it has been improving a lot over the last 5, 6, 7 years. So why should we doubt him now? Because he sold some stock, because he tweeted something. But all of those things are just drama on X. And again, people get caught in the narrative and they get shaken out of the stock. But I'm not seeing the CEO being a reason of why I should be selling HIMS. I would not be selling HIMS because of the oral GLP-1 solutions, although it's going to make the market more and more competitive, but the CEO knows that, which is why HIMS is not just a GLP-1 company, it's a sexual health company. Dermatology, hair loss is huge in the United States and all around the world. Mental health, hormone health, longevity, that's another big one. And the HERS business alone is growing rapidly, so much that the HERS business is ahead of the HIMS man healthcare business on the App Store. So it's been expanding rapidly. And most of the HERS women business is more for hair care and mental health. And it's not much for weight loss and GLP-1s. So yes, that's going to hurt the business in the short term. But over the long term, HIMS is diversifying in many different areas. And they're growing global in Europe and in Canada. So I couldn't be more excited about that. And if you look at their latest acquisition of Zava, this is the 2024 annual report for the UK business alone. That's just the UK. The company grew in the UK 97% last year, and most of this business is not related to compounded GLP-1s. So the company is clearly diversifying away from it. I would not be selling HIMS due to the company having no moat or no competitive advantage. And there's two reasons for that. The first reason is, and might be a controversial one, I don't believe you need a moat for you to make money in stocks in the market. If the company has a moat, then yes, that's amazing and it should command a higher valuation. But I've invested in a lot of terrible, trashy companies and I made money with them, not because they had a moat, but because I paid the right price. And this is something that Howard Marks says. He said, it's not what we buy, it's what we pay for what we're buying that determines if we're gonna make money in the market. I've seen many companies with a wide moat, and the moat is still there, like MSCI. The stock has been flat for 4 years. Why? Because people overpaid for the moat. I've also seen trashy companies that did really well. Why? Because people paid the right price for the underlying business. I have a stock I talked about many times, Mama's Creations is a food company, and I've owned the stock from $1.74. And every time I talk about it on YouTube since then, people tell me it has no moat. And I agree it has no moat, but I paid the right price for the company and I have a good CEO. That does not mean that the company is not going to do well because it has no moat. Now, I believe because HIMS does not have a really strong moat, it should not be trading at a crazy multiple. Like if HIMS right now was trading at 15 times sales for a company that has no moat, I would say that's too much, that's too expensive. But 3 times sales and 4 times sales, I think the no moat story is mostly priced in with the valuation. So despite HIMS having a lot of competition, I believe it's trading at the right price and even at an undervalued price for the underlying business, and especially taking into consideration that HIMS has 75% gross margins. In a company that has no moat, you wouldn't see 75% gross margins. You'd see 40%, 30%, even less than that, 10 and 20%, sometimes even single digits. But the fact that HIMS has 75% after Roe has expanded, after Amazon has entered the space, after all those companies, and they're still putting up 75%, maybe that's for a reason. Maybe the reason for that is that why, if let's say it's very easy to start a compounding pharmacy and anyone can copy HIMS, okay? Let's say I go and I start my own compounded pharmacy business and I want to take over a HIMS business model, okay? Now, why would people trust my product over the HIMS product that HIMS has been doing it since 2016, 2014, and they have hundreds of thousands of reviews and video reviews and all these kind of reviews? Why would people trust my product? Would those people be willing to take risks on their own health to save $20 or $30 to take my product over the HIMS or the RO Health product, I don't really think so. This is the HIMS moat or competitive advantage, is that it came first, it's trustworthy, and that's why you have HIMS, RO Health, and one or two others. They are pretty much dominating the space. And if HIMS can get a 10% market share of the total TAM, not just in the United States, but globally, or a 5% market share, then the returns from here are going to be amazing. Now, those are the reasons of why I would potentially consider selling HIMS. The first reason is if the United States completely bans the compounding of drugs. And I highly doubt that's ever going to happen because a lot of people depend on that stuff. A lot of people with certain conditions that want a customized, drug, a customized related prescription. This is all being compounded. Compound has existed for decades, since the 70s and 60s. People have been, a lot of pharmacies have been compounding. So I highly, highly doubt that's ever going to happen. But if that does happen, that's going to affect the company in a major, major way. And the company would only be able to sell generic. Just like right now, they sell generic GLP-1s in Canada. Once the patents of NVO expire in 2031, then HIMS can sell generics in the United States, or they're going to have to kind of get some licenses and come up with their own product. So that would change the thesis in a major, major way. And that's a big one if there's any regulatory shift around banning compounding in the United States. The second one is if the CEO leaves the company. I like the CEO very much because he's a founder CEO, and founder CEOs tend to do better. They have an attachment to the company, they have a duty to their company, they founded the company when it had nothing. They just come to the company, got offered millions of dollars, and got a job. It's really different. And I love the founder CEO kind of model, and he's a CEO and he's a founder. So if the CEO leaves the company, I don't know if I'm going to be trusting someone else to run HIMS and hers as efficiently as he is running it. Another reason why I would consider selling HIMS is if revenues decelerate for like 2 to 3 quarters. Like if it's now 598, it goes to 570, then 520, then 450 for the next 3 quarters, then I would potentially consider selling HIMS. If the HIMS total numbers of subscribers, they start to decelerate and mainly decline over the next 3 quarters in a major, major way, I would consider selling the stock. Why? Because HIMS has everything they need for them to prove everyone wrong, for them to transition the business away from being just a GLP-1 company. They have $1 billion in cash. They hired so many people and so many executives. There's no excuses. And we want to see execution from those executives. The company also acquired Zava, so they have everything they need to expand in Canada, everything they need to expand in the UK and the EU, and they're even talking about Australia, and they have $1 billion in cash. So there's really no more excuses for HIMS not to massively boost their total subscribers, for them not to massively boost their revenue growth in a major, major way. Now, if all those things are in place, the perfect storm, and over the next 3 quarters, HIMS is declining in subscribers and it's declining in revenues, then I'm like, okay, something is wrong here, because if they're not pulling this off right now with the amount of resources they have, then they will never be able to pull it off. And then maybe something has materially changed in the business model and the thesis and the competitive landscape, and maybe that's the time to move on. But right now, I'm not seeing enough reasons for me to move on from this investment other than the stock going down. And when the stock goes down, people try to justify why it's going down. It gets in their head and they overthink about stuff. And then they ultimately sell the bottom. That's, from my experience, what normally happens. But based on actual numbers, I'm not seeing anything. And I believe that with the growth stocks in general, you need to have thick skin, and you need to be able to handle massive, massive drawdowns on little to no news. And for you to be able to do that, you have to ignore the short-term stuff as much as possible and try to only focus on the quarterly reports. And it gets much better if you do that, not just with HIMS, but with most stocks in general. And that was just my opinion on HIMS and other stocks. And if you're interested in what I'm buying, what I'm selling, actually everything I do, and this is the link if you're interested. But thank you again for watching. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.